JB Cycles here with another video this weekend. So today I'm looking at the Indian market and I'm answering some questions. So first I would like to say that I do not follow many markets. And my experience is that most markets correlate with each other. And most markets follow the same cycles. So earlier today I showed the German DAX seems to follow the same cycles as the S&P. I know that the Norwegian market mostly follows the same cycles as the S&P. And well, we will see here that the Indian market is of course also following the 3.5-year cycle up here in red. So I don't think I will take all your requests and check on oil or gold or silver or any market, but today I just had some spare time to have a quick look at the Indian market, and I found some data going back to 2007, so we will have a look at that. Also I see some questions about what software I am using and how I find all these cycles, and that is not so easy to answer. But of course mostly I am using spreadsheets, Microsoft Excel, and well, I've been spending 20 years or more on this research. I often use an Excel plugin for wavelet analysis that I find helpful when I'm looking for oscillations in the market. I do some Fourier spectrums and some, I would call it manual work, and also I have these theories about planetary cycles and solar activity. So I have done a lot of work where I'm comparing solar cycles with the stock market. So I cannot start teaching you all of that. So, but today the Indian market. So we will compare here with the 3.5-year cycle up here in red. We see that the stock market top in 2007 was around the theoretical cycle high. The lows were perfectly at the cycle low. Then this top was a bit early top. We see at the cycle top we made a shoulder, and then we had an early bear market low in 2011. At the cycle low we made a higher low, and then we continue up to this top. That was a late top, that's bullish right translated, and then we have a low perfect from the cycle, and then we go up to this top, which is a late top, and then this whole cycle low is very tricky. Many markets look like they hardly were making any correction at all. It was more like a very bullish sideways correction, similar to the period 2004, 2005. You hardly saw a cycle low in the markets. And then, when you thought from the cycle it was kind of all clear, the bear is gone, then we had the COVID crash. So it looked like the market should do this, but we had the COVID crash. But it was soon over, and then just half a year later we were back on track. But at this point we often get some deep corrections, and they can turn bad. Well, here we didn't have, but here we kind of had deep correction. Here we had a deep correction. The COVID crash. Well, if we go further back in time for the S&P, you will see there can be some danger at this point, but low probability. And I have never seen something like the COVID crash happening at this time. So this top was perfect in sync with the cycle. This low was an early low, and this theoretical cycle low was a higher low in the market. And now, well, we have topped out. So is this, most likely this is an early top. That's bearish. But we have been trending down since, looks like September, October or something. That's a long correction. We have broken the 50-week moving average. You see the cycle has a reaction to the upside here. So if we go, well, let's look at this one. That's kind of similar. We bounced up to make a shoulder. So, without looking at the shorter cycles, I think, that's very possible we could make a shoulder here. But then, I would be, I don't think the Indian market will go up to all-time highs here. Now the bearish cycle takes over and it stays bearish into, the late summer 2026. So it's not time to be bullish here. It's rather sell the rallies. But you have to let it rally a bit first. Yeah. So, the shorter term cycles for the Indian market. Here I'm comparing in with the candles, the Indian Nifty50 against the S&P here in red. And looks like we have pretty good correlation into this point, late September. Then the Indian market started turning down while the S&P continues up. So I don't know what's going on in India. Is it something special going on that happened there? Or, my theory, my experience is that at bull market tops, you often see the US markets is the last market to turn bearish. It's like the capital is disappearing, the liquidity is disappearing all around the world, and it goes into the US, and then finally when all the capital has escaped around the world into this safe haven, or I don't know what it is, but then the S&P finally turns down. Call it conspiracies or whatever. So, I guess, I haven't analyzed it, but I guess that the Indian market should also follow the same shorter term cycles as the S&P. And they, well, in fact, they are, we have the 17-week cycle. It is topping around a bit into March and then goes down into May. So, well, there could be room for a bounce up here. But if the S&P starts to crash down, I don't know. So I have no advice for the Indian market other than the 3.5-year cycle is soon turning bearish. The market has already turned bearish, so it looks like sell the rallies. It could be a rally here in the spring sometime, making another shoulder, but sell the rallies into around summer next year, 2026. And then it's time for the next bull market. See ya!